Why I do not regard gold as an investment, silver as an investment, and what do I regard these instruments as? Hi, Eugenia and at the Wealth Effect, and thank you for joining me. Why is gold not an investment? Well, an investment is traditionally an instrument which you park your money in and you expect to receive a daily, weekly, monthly, or yearly return in the form of interest and dividends, which we know that gold doesn't conservatively or traditionally provide. No, gold is more than an investment. Silver is much more than an investment. It is a means to preserve wealth. It is a means to protect you against currency devaluation through inflation. It is a savings product. I save in gold. And for me, I regard gold as simply swapping my fiat currency that's losing value for gold, which is not losing value and which hasn't lost value for 100 of years and thousands of years even. Earlier this week, I just decided I'm quickly going to buy an ounce of gold. It wasn't even a big decision for me because I simply swap my money, one form for the other. I swap my fiat currency for gold that has real value because it's real money. So I save in gold. I do not invest in it. Right, so I'm going to show you a couple of examples. And the reason why we can see that fiat currency loses its value is there's no more perfect instrument to measure these against than to gold. Why? Because gold has never changed its characteristics or its qualities over thousands of years. Gold today is the same as it was 1,000 years ago. Gold today still consists of the same element. It still consists of the same qualities because it cannot be altered by human, only in its physical form, but not the qualities of gold. So it is not like comparing a can of Coke today to a can of Coke 35 years ago, where there's different ingredients perhaps, where there's different volume, the metal of the can is made by different processes and different metals, etc. With gold, you're preparing like with like, and that's why it's the perfect measure to tell us how much fiat currencies have been devalued. I'm simply looking at an example of about 10 years, for the past 10 years, and we're currently on this chart looking at the gold price. 10 years ago, an ounce of gold in US dollar cost $970. Today it costs $1,430. Right, so the price of gold has increased by $460. Right, so what we need to do is, if we say 970, so it's 460 divided by 970, that basically shows that in the last 10 years alone, 47% decrease in the value of the US dollar. Let that sink in for a second. You can buy 47% less gold now than you could 10 years ago, and that is because fiat currencies continuously get printed without anything backing it, therefore making everything more expensive because you need more currency because it's worthless, it's losing its value. Let's have a look at another couple of examples. So if we look at, here's the Chinese yuan. I haven't done this calculation yet, so let's see what this looks like. Chinese yuan, okay, it was about 6,500 yuan 10 years ago, and now it is about 9,800. Okay, so 9,800 less 6,500. 3,300. Should just get that there, divided by 6,500. Chinese yuan has lost 51% of its value in the past 10 years because you can now buy 51% less gold than you could buy with the yuan 10 years ago. Right, I see you are seeing what I'm doing here. Right, so let's have a look at the euro. Euro is a very young currency, as we all know. Right, so 10 years ago, the euro, about 670 euros. Today, about 1,280 euros for an ounce of gold. 1280, 80 less 670, let's say 670. 610. So the euro has lost a whopping 91% of its value over the past 10 years. Now, gold was worth a bit more in euro in the beginning of the 2000s when the euro was still strong. But just over the last 10 years, the euro has lost 91% of its value. So let that also sink in. Why is gold better money? Because gold has no counterparty risk. Your piece of gold that you hold, that you own, is not at the same time somebody else's liability, like this money, because this money is printed with debt backing it. That's why somebody's in debt for this money, and more often than not, it is taxpayers that's in debt because of fiat currency creation. South African rand, 10 years ago, 7,800 rand. Today it is well over 21,000 rand. Let's make it 21,000 rand. Okay, so 21,000 divided by, oh, sorry, not divided by, what am I doing? 21,000 rand less 7,700. 13,300 divided by, oh my goodness me. Right, so it's lost 172%. It's 172% more, less gold that you get now than what you did 10 years ago in South African rand terms. Right, so I'll conclude with that example, and this is why I save in gold. Like I said, for me, buying gold is simply swapping my fiat currency for real money that will keep its value as time progresses. So this is me from The Wealth Effect. Thank you for joining me, and I hope that you learned something today. Thank you, and I will see you again soon.